So NAT Stock reported their earnings recently, and many of you here on my channel already know my stance on the company. On April 26th, I released a video warning investors around the risks of investing in a company like NAT and other oil tanker stocks. The thesis that I heard from so many viewers is that NAT stock just has to go up because demand for oil has collapsed. Trust me guys, I got a lot of hate for this video, but I knew it had to be released and give a different perspective on what everyone on YouTube wanted to hear. Well, fast forward to when I'm recording this video and the stock has plummeted 34% since. And I'm not going to say I told you so, but well, sometimes seeing both sides of an investment will save you future investment losses. But anyways, today what I want to discuss is some details that I found from their earnings report. And I also want to discuss something that you guys have been throwing at me here with this investment, and that is their dividends. So we're going to look at both of these cases. We're going to see if it does make sense to maybe buy more shares of NAT, or maybe on the flip side it makes sense to cut your losses and stop bag holding the stock. We're going to discuss all of that in today's video. Now guys, I know I'm going to get a lot of dislikes on this video, so please support the channel here. Drop a like down below to offset those haters, and let's get this video to at least 1,000 likes. So let's start off with their earnings report here. So as everyone expected, NAT reported a good quarter. They beat on EPS, they beat on revenue, and they had strong growth year over year, with revenue coming at over 67% growth year over year. This resulted in the stock rallying near 7% pre-market when they released the earnings, so investors were excited to see the massive gains they would get when the market did finally open. Well, when the market opened, investors couldn't get out of the stock fast enough, and it ended up closing red on the day, down 7% from open, and closing back under $5 per share. My assumption here, which I think is fairly accurate, is that many who bought into this stock did so in the $7 to $8 range, and the first sign of the stock potentially rallying resulted in big selling to cut their losses in the stock just in case it dropped lower. In my opinion, this will continue to happen in the coming weeks as well, as retail investors continue to look for an out on this stock. It was all fun and games that this is going parabolic and everyone is making some easy money on this stock, but now that it's down over 30%, everyone wants out. This will result in continued selling pressure, in my opinion, at least in the short term, for NAT stock. So even strong earnings here from this company could not send the stock back up into a rally. A lot of investors were waiting for this catalyst here to set the stock off on another run, but that did not happen. So let's take a look at their income statement here, breaking down how they did in the quarter. And I have arrows pointing to the same quarter last year as well, so you can see the growth year over year. Revenue, as we can see, blew up, net income blew up, but the operating expenses did increase. However, it wasn't up by a massive amount, so it was fairly negligible here in my opinion. However, their outstanding shares at the bottom here was up year over year, meaning that they issued more stock since last year, resulting in investors' existing shares to lose some value. But again, this wasn't by a huge amount, but it is something to make note of. Keep in mind that healthy companies buy back their shares and reduce their share count year over year, not increase it year over year. So here's the balance sheet now to get a better understanding of what's going on. Cash, you can see, grew quite nicely year over year, which is always good to see cash balances increase. This resulted in a healthy total current assets, which more than covers their total current liabilities. However, when we look at their total asset value, it barely increased year over year, and this is not impressive in my opinion, as the business essentially created no new value versus a year ago. The current liabilities is up massively year over year, but the total liabilities is down year over year, so it's good to see them paying down some of their obligations. So I mean, looking at this balance sheet, it isn't much better or worse than say a year ago, and this is despite an amazing quarter from the company here, and in my opinion, this is a big reason why the stock didn't move much after its earnings report and actually sold off. The bottom line really was that this earnings was priced in, the news was priced in, and there wasn't anything really to get investors even more excited here. Now I know a lot of you are thinking, and you're going to rebuttal here by saying, well, March, they only had a couple of weeks there where they earned a lot of money, But April was the real moneymaker for this company. And sure, yes, I completely agree that April was probably their best month in their history because oil demand completely collapsed and companies were searching for anywhere to store this oil. As a result, NAT was able to actually charge some absurd amounts here to companies and make them sign multi-month contracts as well. So they're going to be earning a lot of money from this global issue. However, now that we're into May and almost into June, we can see that demand is slowly starting to pick back up globally, which means that oil prices have once again started to climb, the demand for oil has started to climb, and as a result, the need for storage and oil tanker stocks has started to decline. And yes, like I said, a lot of the customers were forced to sign multi-month contracts, but what happens once those contracts are done? Are they going to renew at those rates? Unlikely. And I know a lot of you guys are going to say, well, it doesn't really matter what happens in 6 months from now. The stock was just a short-term hold. Well, to that, I'm just going to rebuttal it back to you and say, how is that short-term hold working out? Clearly, the market is forward-looking. Clearly, this was priced into the stock. And right now, we're not seeing a lot of movement here, despite all of the great news surrounding this company. In my opinion, this is because all of this was known. In my opinion, it's because a lot of the smart money realizes that after the 6-month contracts or whatever are done, a lot of companies are not going to want to renew at these absurd rates. Oil demand is going to pick back up globally. Airplanes are going to start flying. Cars are going to start driving again. And we're not going to need these oil tanker stocks as much as we did here in April. Now, the next thing I hear over and over and over again from NAT stock bulls is the dividends. They pay massive dividends and they're going to be paying massive dividends here because they're earning so much money. The company even explicitly says here that dividends are a major focus and priority for the company. So I don't really blame investors here for thinking that this is a big reason to own this stock. In the last quarter, they doubled the dividend to 14 cents per share, and many investors think the next dividend payment will be even more massive. This is because the company is earning some absurd amounts of money here from oil storage, and they plan to reward their shareholders with all of these profits. Well, we finally got some news here on the next dividend payment and what it's going to look like, and it was massive. Wait, what? They only increased it by 42.9% to 20 cents per share. So even after this record month here, record this, record that, the company is only going to pay their loyal shareholders 20 cents per share. This equates to a yield of 17.74%. Yes, that is pretty high. However, if you bought the stock at $7, this results in a yield of 11.4% at current prices at around $4.75. And if you were unlucky here and you bought the stock at the peak at around $9, your yield with the dividend increases would be around 9%. Yes, that is high, but let's put this into perspective here. Say you bought an NAT stock at $7 per share, and I feel I'm being conservative here because I feel a lot of you bought it at this price or slightly above this price. And let's also say that you bought 100 shares here, which equates to $700. With the current stock price of $4.75, this would mean that you're down $225 on your investment. But wait, the dividends. Okay, so they're paying 20 cents per share a quarter, which means that if you own 100 shares of the stock, you get $20 in dividends. So at the end of the day, with those huge dividends that you were expecting, you're still down over $205 on this stock. Now, if you keep holding the stock for the rest of the year and claim the full 80 cents of dividends that they pay out for the year, you'd get $80 in dividends for your 100 shares. Assuming the stock price stays around this price, guess what? You're still down $145 on your investment, and what you've done is just taken on the added risk of holding the stock for a full year. All of a sudden, this short-term speculative investment has turned into a long-term investment just to recoup some losses. This just sounds like a nightmare of a scenario of an investment, and I really hope that a lot of you that fell trapped to this learn from this mistake, because learning these kinds of mistakes early on will make a huge difference for your future investment career. All of us have fallen trapped to these kind of investments, to kind of penny stocks or cheap stocks that appear to be great value at the time. But eventually we learned that, you know what, maybe it was a bad idea, maybe it makes sense to just cut those losses, and NAT stock may be one of those investments. I mean, sure, the stock could go back up here in the next year, but guys, looking at the facts, everything is stacked against this company. We're not going to see months like April again, in my opinion, where demand is just off the charts. We're not going to see as much need for oil tanker stocks moving forward. And if we just look at the history of NAT stock, we can see this company is just in a downward trend overall. And even this huge catalyst here wasn't enough to really send the stock up massively. I mean, just looking at this chart, does it look like a healthy business you want to hold for a year? It's down over 91% from its peak. And if I had to place a bet here, I'd expect this to be lower in a year than higher. Also, remember, dividends are not free money, because when a dividend is paid out, the stock price adjusts by that amount. So expect the stock price to be reduced automatically by 20 cents when the next dividend is paid out. So if I was holding NAT stock today here, I would seriously consider cutting this investment and moving it to a better opportunity. Just look at it this way, guys. If you just use the cash that you put towards NAT and instead put that towards a blue chip giant like Apple, Microsoft, Facebook, kind of these no-brainer stocks, you would actually be up on your investment as opposed to being down here, and you'd be holding a world-class blue chip company where you don't have to worry about the future of the business. But instead, by chasing these cheap stocks, these fundamentally poor companies, in my opinion, you're left down on your investment, you're left losing sleep, and you're left wondering questions like, should I average down on my position to maybe break even? Should I cut my losses? And all these things that, as a beginner investor, you don't really want to deal with on a regular basis. I don't know about you, but I would personally hold a strong blue chip company with a strong future than a company like Nordic American Tankers here in NAT stock and be uncertain about their future and uncertain about my investment. Now, I know a lot of you are going to disagree with me, and that's completely fine. That's exactly why we have the comment section down below, because you guys can actually share what you think and why you disagree with me. The stock could very well be at $10 per share or higher in a year from now, but my strong suspicion is that it probably will not be there, and we will actually be at around this price or maybe even lower about a year from now. Keep in mind that just about a year ago, the stock was trading at $1.75 per share. So once the world continues its efforts to resuming a sense of normalcy, and as oil demand continues to pick back up, I would expect NAT to trend lower in a slow and painful decline. Now, like I said, guys, this could really go either way. Things could really work out for this company, and maybe we start a massive multi-year uptrend here, in which case all of your investments would make you a lot of money. On the plus side, you are getting some dividend income to offset those losses, but I wouldn't personally be using that as a reason to continue holding this stock. Dividends make sense for fundamentally strong companies, but for companies that struggle, paying dividends and holding it just for those dividends really makes no sense to me. I'd really love to hear what you guys are planning to do with your investments. I know a lot of you guys are unfortunately down on your investment, so let me know in the comment section down below if you plan to average down here, if you plan to cut your losses, or maybe you just plan to continue holding and see how things play out. Guys, as always, I wish you all the best with your investments, but I hope you found some value in this video. And if you did, remember, drop a like down below. And if you're new, hit that subscribe button down below with the bell notification as well. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.